All right, we'll go ahead and kick things off. GM everyone, welcome to this week's DAO meeting. Just to emphasize and remind everyone, hopefully this can continue to be a forum for everyone to present questions, discussion topics, etc. We'll typically continue to go through various updates from different contributors at the beginning, but we'll always try to pause at the end for questions, comments, etc. So just a couple things to mention on my end. So Scribe held their first public marketing meeting yesterday. Those are going to continue to be on Wednesdays at 11 a.m. Pacific, 2 p.m. Eastern for the foreseeable future. And yeah, very excited for that to kick off in earnest. They've been spending most of their time doing research and learning about Beanstalk the last couple weeks, but hopefully over the next couple and the rest of the month, more of their work is public and getting out into the wild. I personally found it impressive the extent to which they were able to run that meeting yesterday after only really a week and a half of looking into Beanstalk. So very excited about getting to work with them, and also just want to give another shout out to Sync and Bacchus for sourcing that, because for a while we've been looking for very high quality folks on the outreach front, and hopefully we found them. Otherwise, I dropped a message in the weekly updates channel earlier this week to give folks a sense of timeline for various launches over the next couple months. I've talked about this at the DAO meeting a couple times, but I think it's good to have it in writing. So maybe just to briefly summarize, outside of the non-Beanstalk development happening, for like wells, pumps, etc., there are really 3 BIPs that the DAO can expect from Beanstalk Farms, at least over the next couple months. The first of which is what's currently called Sunrise Improvements, which introduces a Dutch auction for temperature in the field, which is a much discussed community idea from several months ago, as well as some optimizations to the Sunrise Award generally that Beanstalk offers every season. Hopefully, there's some more testing being done with regards to some simulations of how this new model would perform in past seasons, and hopefully that proposal can go up by end of month. The other, which is a bit farther out, is Silo V 3.1, and we'll probably skip over explaining all the details, but that is going to provide a lot of the infrastructure for things like tokenizing deposits, a future gauge system, as well as changing the seeds per BDV reward for unripe assets. And there was some discussion and informal voting going on in one of the dev calls last week, which folks should check out if they weren't able to. The other BIP, which I'm not sure if the development has started on, and maybe Publius can talk about that in a bit, is the BIP that integrates wells and Beanstalk. And so, one of the obvious changes there is whitelisting the Beneath Well LP token, but that's sort of a low-hanging fruit on the development front, and there's other work to do with regards to updating the Oracle that Beanstalk uses, supporting any conversions to and from that well, etc. And so hopefully about a month from now, as far as all the code that will be necessary to ship and whitelist a Beneath Well, hopefully all of that will be in auditors' hands and call it a month's time, at which point it'll be a little bit out of our hands, but then hopefully 3 to 4 weeks out from a proper launch. And in my note, I think I wrote that we're currently projecting mid-May for having the Beneath Well whitelisted. So those are a couple thoughts on this front. We also canceled the dev calls this week. I think we're sort of figuring out that we sort of do have a lot that we know needs to get done over the next 2 to 3 months, and so to some extent got to do a little bit less talking, a little bit more doing. But on that note, would be curious to hear Publius talk a little bit about that with regards to roadmaps that are more than a couple months out, as well as giving the community a sort of a download on what's necessary to build for the Wells integration BIP. If you guys could talk about that.
What do you mean by what's necessary for the Wells integration BIP?
Like, what does it mean? What has to be updated in Beanstalk? I think perhaps it's not totally obvious why that BIP is necessary outside of whitelisting the well.
Totally.
For example, last week we were talking about the oracle to use for converts moving forward. Not sure if that's related to beneath well conversions. That's sort of what I'm thinking of when I ask the question.
Right. So as far as that question goes, the Beanstalk integration consists of kind of three separate things, and that are three ways for Beanstalk to read data that is stored and processed by the well and the corresponding pump. The first of which is the silo integration, where the silo needs a way to determine the bean denominated value of any well LP token. That for the most part has been hooked up. That's probably the simplest. It just needs to query the pump and then determine the price given the balances. For convert in minting, it's a little bit more tricky, as in the case of convert, Beanstalk needs to know how far the current price is from some peg price that is, we'll talk about how that will be chosen. And that kind of requires, at least as of now, implementing some well function level functions that can kind of calculate the delta B, both in regards to a swap and adding / removing one-sided liquidity. In the case of minting, it uses the delta B, for swapping, which is, kind of how many beans need to be sold or bought into the well. For convert, Beanstalk uses, kind of the delta B in relation to adding and removing liquidity. How many beans needed to be added or removed, as one-sided liquidity in order to restore the peg. So kind of, currently on this end, have some implementations for those and in writing tests. And, kind of the next step is to implement a convert type that hopefully should be generalized for all wells, that essentially, calls the new functions on the well function and then performs, adding liquidity from one side or removing liquidity from one side. That's the next big step, and focused on that now. The third piece is the minting piece, which again should hopefully be sufficiently generalized, assuming that this delta B function is defined within a well function, which should allow kind of pools to be whitelisted and de-whitelisted from the minting schedule without having to write any unnecessary code. So overall here, the goal is such that any well, that uses a Beanstalk supported pump and a well function that supports Beanstalk, should be able to kind of seamlessly integrate both into the silo for deposit, converting, and minting. So that's kind of the work that's required on that front. Now, I guess before moving on with that, these pumps give us a very, are fantastic in the sense that they give us an on-chain price oracle to price on-chain assets. However, they don't solve the problem of how do you price off-chain assets. And, as we're all well aware, Beanstalk is pegged to USD. And, there are currently two ways to really get the price of USD on-chain. The first of which is to use an on-chain oracle to get the price of some convertible on-chain stablecoin. The second is to use an off-chain oracle. Historically, Beanstalk has used the on-chain oracle of some convertible stablecoin, some on-chain convertible stablecoin, namely USDC, to get the price of USD, assuming 1 USDC equals 1 USD. Now, this was used in the original Bean ETH pool before replant. It used the Uniswap v2 ETH USDC pool. And in the upcoming Sunrise Improvement BIP, Beanstalk uses the Uniswap v3 0.05 BIP ETH USDC pool. However, after last weekend where, we saw USDC depeg significantly to the downside, wanted to bring up the question of whether, it still seems like it makes sense to use a ETH USDC on-chain oracle versus Chainlink oracle that would return the ETH USD price. Kind of the logic for using the on-chain oracle with USDC has mostly been due to the fact that, Chainlink only has 21 whitelisted doxed validators. And when, assessing which one of these Chainlink or which one of these oracles, an on-chain oracle against USDC or an off-chain oracle against the actual USD price is more resilient, generally it was determined that, the on-chain ETH USDC oracle is more resilient. However, I think last weekend brings that decision into question, and would like to open the floor, and maybe now is not the appropriate time, but, it's worth having discussion, about whether, to get the price of USDC or to get the price of USD on chain, does it make more sense to use the Chainlink oracle or the Uniswap v3 ETH USDC oracle, which is currently planned and currently being used for the Sunrise incentive BEP.
When you're saying the price of USD, do you mean the price of ETH in USD?
Yes, apologies.
Okay.
Thanks for all that context. And yeah, I think that would be an appropriate topic for perhaps a dev call in the future. So do you, I guess, go ahead, Chris. You had something to add?
No, I have like some feedback. Well, I didn't understand the whole first part about how this is being used, but as far as getting prices go, using the on-chain stuff is going to fail you because they're going to depeg again. And the only way that could work is if you somehow found a way to have a sanity check or something like that that would catch discrepancies. I could see that working maybe if you use like Chainlink as a backup, or vice versa. I mean, it doesn't have to be one or the other, I guess is what I'm getting to. Like, right? Couldn't there be some kind of combination of these things that could work in conjunction with each other, or sanity check the other, or trigger some kind of an emergency pause or something if it had to?
I think those points are all very, helpful, Chris, and, definitely, like the idea of, somehow trying to use them both. Not sure what that would look like from the case of, if it were to be the average, then, if either oracle were to be significantly manipulated, then the average of both would probably also be manipulated. So, not sure average works, as that kind of introduces a risk vector to both of them. Minimum and max, of the two, it's kind of hard to say. But definitely like the idea of, maybe if there is some deviation between the two of them, it shuts off, the minting oracle or something. But, Beanstalk should be able to, perform in an instance where there is a significant USDC depeg. So the best option. Go ahead.
There's two examples you should take a look at that are already in operation. One is Compound, the way that they use Chainlink as a primary, and then they use Uniswap TWAP as a sanity check. And if Chainlink deviates too much from Uniswap, it doesn't just switch over to Uniswap, but it triggers some sort of a pause, like an emergency situation, where then governance can examine it. And then the other example, I just saw somebody put it in the chat, is Liquidity. They use Chainlink as a primary, and then if Chainlink deviates, I believe it's significantly deviates, so like more than 50% from Teller, then it switches over to Teller price data, which is a model that I question. It hasn't really been battle tested, but it might inspire some ideas for you.
Thank you for bringing those to our attention, Chris. I've taken a look at the liquidity oracle, and it is interesting in the sense that when there is too much of a significant deviation, it kind of stops. It uses Teller Oracle for the sanity check, but only needs to if there is a significant deviation in the price of USD, which is kind of cool. Like if there is detected significant volatility, at that point it'll use them both. So plenty to think about here. I hear you on the point that it's unclear how battle tested Teller is. As far as I know, their validators are staking the Teller token, which, it's unclear how much value the Teller token has overall. It seems it's unclear how secure that kind of, validator network is. But hear you loud and clear, Chris, and we'll definitely take a look at both of those implementations and see how to kind of leverage a better on-chain or a better oracle for the price of USD.
Great. So do you, and by you I mean Publius generally, have anything you want to share in light of, having fewer dev calls, what you're spending time thinking about at the moment? You had mentioned in a conversation that you were hoping to spend more time on the theory over the coming weeks. Does that look like the larger Beanstalk upgrades like on-chain governance? Does that look like more fundamental stuff and farther out on the roadmap? Curious if you had anything you wanted to share on that front.
So, excuse me. At this point, it's becoming clear that the general limiting factors to a, if not finished version of Beanstalk, a close to finished version of Beanstalk is an on-chain gauge system, an on-chain governance system, and then some sort of set of DeFi primitives that can facilitate real economic activity in 1155 tokens. And in short, while a lot of the current work that's happening on Beanstalk is, very exciting, at least on this end, feel like there's less clarity, or there's not enough clarity as there should be collectively on where things should be in 1 year or 2 years or 3 years. And so we want to do a better job of contributing to that discussion over the next coming months. So that's some of what we hope to really be able to contribute to the community over the next couple months is high quality contributions on all of those fronts.
Can you share anything directionally as far as what that looks like outside of, you mentioned explicitly like the gauge system and the governance system? Maybe anything to add on the front of the DeFi stack with regards to, you've talked about this token factory stuff. I don't know if that's too early to, be worth surfacing.
Well, the punchline is that we wrote this article at the beginning of the year, which laid out where we understood things to be in the moment, and sort of highlighted 3 separate base functionality, pieces of functionality: a place to exchange, a place to mint assets, and then a place to lend those assets. And the more work we've done on that front, the more we realize that likely reduces to a single protocol or a single token factory. And so one of the things that we're very excited about in terms of facilitating real economic activity is the potential development of a generalized token factory that can talk with itself and sort of an interface for value on chain, such that you can start to have a network of value across the entire Ethereum network that is defined in some sort of standard way. So that's what, we've had a lot of these somewhat ambiguous conversations about real economic activity in some of these DAO calls and dev calls with the community, and we've been trying our best to think about what that might actually look like in the case of Beanstalk or in general. And over the next couple of months, hoping to be able to publish some work on that front.
I think, one thing that's been discussed as kind of what is it comprised of financial activity. You have, trading, buying and selling, lending, and borrowing. Think current solutions such as Tractor are great solutions to kind of efficient trading, where it kind of optimizes around minimizing the price of creation. Orders can be sufficiently arbitrary. There doesn't really seem to be any limitation on the trading side. But thinking about where, borrow and lending, and how to make it truly efficient and competitive, what exists out there needs to allow infinite leverage, or as theoretically whatever theoretical limit exists in terms of how much leverage you could possibly give out, and do it in a way such that no bad debt accrues. And this is something that the current architecture, as it's currently implemented, is not capable of. So, kind of thinking that kind of seems to be what the goal might look like in lending. Going to do a lot of thinking about how to facilitate some financial stack that can facilitate that, and also be able to leverage as much liquidity as possible, in the sense that kind of not all liquidity can be read on the blockchain, and kind of the goal is that you can be aware of all of the liquidity that exists out there. So looking forward to exploring solutions to problems such as those.
Great. Very much looking forward to reading some writing on this front in the coming months. I'll pause for a sec to see if folks have any questions or comments. All right, so Chris, do you want to spend a couple minutes talking about the nature of your investigation into Beanstalk, what exactly the relationship between the Blec Report and Beanstalk Farms is, and then maybe share what you intend to talk about on the Twitter Spaces with Publius on Monday?
Sure. I've been working in DeFi trying to build a case for transparency and decentralization for 3 years. And I started a website recently called Blec Report, which is at blec.report. And it's sort of like a repository for stuff that I have been researching and floating around and generally interested in. And usually I focus on DeFi projects that I'm interested in using, so I'm sort of a decentralization maxi myself, so I've focused a lot on Liquidity and on MakerDAO in the past, and Aave, and a lot of the larger projects that have significant usage, and a lot of people have seen value in the work I've been doing. So both in pushing for decentralization, but also pushing against centralization in the regard of the impact that it can have on regulation and eventually things like CBDC and stuff like that. So that's the work I've been doing. And I put a call out to projects out there in the world who were interested in supporting what I was doing. And part of the challenge I have is I get requests all the time from projects that want me to research and take time out to learn all about them and how they work and stuff like that. But there's just not enough time in the day. I just focus mostly on what I was planning to use myself. So what I did is put out a call to projects that were interested in supporting the work I was doing, and seeing if they were interested in funding me, because I have no other source of income. So I thought it might be a good idea. And then what I realized is if I was going to get funding from any projects, what I would need to do to avoid a conflict of interest, because then people could say, oh, you're just going to give favorable treatment to projects that fund you. What I would need to do is do an honest and independent review of that project after the funding takes place. So the first project that sponsored my work with Blec Report was Threshold Project, which is the issuer of TBTC, which is a wrapped Bitcoin product. So I've already I dove into that project, and I wrote a review on my website where actually I didn't recommend people run out and use it. I actually gave some constructive criticism that I would like to see implemented before I really give it any sort of real endorsement, which surprised some people, but that's what I'm doing here. It's like, it's not paying for an endorsement. It's more paying for a real sort of hard-hitting, unbiased look at how the project works and whether or not I could recommend it as a decentralized protocol. And so when I heard from the guys here at Beanstalk Farms, I said, yeah, because I've heard about, the product before. I knew about the exploit in the past. I didn't know much beyond that. But I was interested in learning more. So it was a good opportunity to do that. It gives me the time to do that, where I don't have to worry about how else am I going to get paid? How else can I make money? If I'm able to have the time funded and actually take that time to do the research, then it's great. It works out for everybody. So Beanstalk Farms generously sponsored my work, and now I'm beginning to learn about the product, and to really dive in. And that's why I'm here, to listen in on these calls and get a sense for how things work and whether I believe that it's got the resilience that is needed in this space for people to be able to use it and not have to worry about their money. So that's why I'm here. That's what I'm doing. One of the first steps is going to be Twitter Space. We're going to do next week, hopefully still, where I just sort of start from scratch. I've had a podcast in the past where I pretty much don't know a lot about how the product works, and I just ask really basic questions about how it works and understand how the code is implemented and understand who we need to trust in order to use it. And at the end of the whole thing, that's what I want to do. I want to figure out, who do we need to trust? Do we need to trust anybody? How much do we need to trust them? And how much of your money do you really want to be putting into this thing and still being able to sleep at night? And ultimately, the whole idea is to help people build their own risk profile. I put the information out there, and then people can decide for themselves. But most of the time, with most of DeFi, it's just too hard to get all the information and to get all the questions answered in the right way. And I'm sure even here, with all the transparency work that's been done, there's still a lot of things that most users probably don't understand about the product or about what's going on behind the scenes in the code. So we'll get to the bottom of it. So I'm looking forward to the Twitter Space on Monday.
Amazing. And for everyone's reference, that Twitter Spaces is at 1 p.m. Pacific on Monday, 4 p.m. Eastern. And yeah, hopefully we'll have a Spaces link up and tweeted shortly.
Yeah, if you're interested in this product, you won't want to miss that.
Yeah, like while it's unfortunate, there are a couple, glaring vectors of centralization, if you will, whether it's exposure to 3-curve or the multi-sig that custodies ownership of Beanstalk. Hopefully, over the course of your research, it becomes clear that, the community and the DAO generally is pretty focused on removing those vectors. And I think that you'll find the disclosure statement ratified by the DAO also pretty interesting. So excited for you to dig in and excited for that Twitter Spaces on Monday.
Yeah, my work, by the way, it's not just like decentralization or zero or nothing. It's like it's more about transparency. And in my opinion, as long as people know exactly what they're dealing with, then it's up to them to decide how they want to use it. So if there's points of centralization, like I don't go out there and just bash Binance all day. They're like the most centralized thing out there. Because everybody knows it's centralized and they're dealing with what they're dealing with. But so I know there's points of centralization here and in most DeFi apps. It's more about people understanding it and making sure that the trust requirements aren't too high. That's really what I want to get to.
100%. That's well said, and couldn't agree more.
And by the way, one more thing. In my opinion, I would say 90% of DeFi projects and founders and teams and DAOs wouldn't want this kind of scrutiny. And I think that, well, maybe not 90, but a lot. Most won't, because they don't want users to know everything. That's over 3 years in this space, I've determined that. And I think that's really true. So I think that it takes a lot of courage and a lot of goodwill and interest in transparency, like the realizing the importance of it in this space to be able to do this, and to reach out and to ask for this type of scrutiny. And I think it's important to recognize that Beanstalk has done that, and regardless of the outcome, like that's brave. You have to have a lot of faith in what you're doing in order to do that. So I just want to throw that out there, and I appreciate that about the team.
Well, thanks for those words. And, although it was only a handful of contributors that ultimately made the call, I do feel like, at least from my perspective, this is something that the DAO generally would be very much interested in. So excited to see how it progresses. All right, switching gears a little bit. Sweet Red Beans, do you have anything you want to discuss, share, etc. on the design front?
Yeah. Hey everyone. So, this week I've spent some time sort of trying to develop a UX and a visual strategy for this first implementation of Wells. And, just to sort of share the high level, I'm sort of thinking like, we're building towards this profitable on-chain exchange that Publius laid out in the Worthless Tech article. And, obviously there's still a lot of work to be done to get to that point and lots of open questions. But I think there's still a lot of excitement to be had about the first implementation of Wells, and particularly the better Oracle framework that is sort of part of this architecture. And specifically sort of that the Oracle implementation that we've designed is sort of built for a post-merge proof of stake Ethereum. And so I think this is sort of the core concept to sort of build the UX and sort of the messaging surrounding Wells. And I think is sort of the piece that we want to get excited about. And I think as I've sort of been watching discussion about, I think everyone is really excited for the Beneath pool, and I think I'm obviously excited for the Beneath pool as well. And it's going to be great for the Beanstalk DAO to have access to the stacks that will integrate better with the needs of Beanstalk. But I think really trying to sort of develop an opinion here on how we can zoom out and invite the rest of DeFi to sort of participate in the tech stack that we're building. And definitely open if others have opinions on that or want to go back and forth about that. But that's sort of been the bulk of the design work this week. And then, additionally, have spent some time sort of outbounding to help us find the right individual who can sort of help us develop the right visual strategy and execute on it to sort of communicate this to sort of the broader DeFi audience. And so have had some success there and hope to introduce some folks in the coming weeks that I'm excited about. So that's sort of the bulk of the work on the design front for the week.
Red Beans, how are you thinking about the extent to which, like from a visual or design perspective, that it should be apparent that, whether it's Beanstalk, it's, the Beanstalk DAO or the Beanstalk Farms that built the software, the extent to which, wells are integrated with the silo. Curious, like when you go to the site, the level to which it's apparent that, this is related to Beanstalk versus not, things like that.
Yeah, that's a great question. I think the place where I've sort of landed and curious for feedback if others have different opinions here is, this idea that this is a primitive that we're building in DeFi, so it should feel related to Beanstalk, but it should feel a little bit distinct. So, for those of you who have seen, the mock-up skeletons that I've been working on, those are not reflective of the visual strategy that I want to approach. I think the idea here is like, we want to make sure that there is sort of a direct relationship with Beanstalk in terms of how we're representing, this DEX. But I think the key here is to make sure that we're still inviting, other protocols to sort of participate in this tech stack, and that may look like it's not going to be like a sort of the exact same farm image, or maybe we're going to deviate from that a little bit to give it a little bit of its own pillar to stand on. So hopefully, that starts to develop more over the coming weeks, and happy and excited to share that with everyone here. But that's more or less how I'm thinking about it.
Awesome, that's helpful. All right, Chad, what would you like to share on the engineering front? I know that there's a lot going on across development, audits, etc.
Yeah, a couple things. So, main focus has been the sequence of BIPs that are upcoming as well as wells. So, a lot of time going back and forth with Halborn and Cifrin over the past week. If you haven't been following, Cifrin is actually live streaming their audit of wells, and we've been spending some time going back and forth talking about how it works and fixing some of the things that they've made suggestions on. So we'll continue to do that over the next week or two as they move through all of the code. But definitely tune into those. They're a lot of fun. A lot of work on the UI front, sort of on two fronts right now. Working on more or less getting the UI hooked up to wells, which Alex and Marshall have been working on, and then also we're nearing the point of shipping the claim and do X functionality, which is currently on a test branch and sort of undergoing final review. So that will be mentioned sometime in the coming week or so. Beyond that, Breen and Pizza Man have been working hard with Funderburker on doing a review of the Silo v3.1 code, and that's something we'll continue to kind of really dig into and make sure that we've got it right. As I think Guy mentioned this as well earlier, but we're also doing some additional testing on how the Sunrise upgrades would have performed against past Sunrise calls to make sure that from an economics perspective, the pricing model which the Sunrise improvements is introducing is sufficient to allow Beanstalk to call the Sunrise function in a decentralized fashion. That's all I got.
Thanks for walking through all that, Chad. I'll open the floor and pause for call it 30 seconds or so. See if there's other things folks want to discuss, questions people want to ask about anything we talked about today, etc. All right. Well, as always, you can always find the upcoming events like spaces, calls with scribe, etc. in the events section at the top left of Discord. But otherwise, thanks everyone for coming, and we'll see you next week.
Thanks, everybody.